Hi everyone, in this video we are going to learn about the various accounting ratios of class 12 CBSE Accountancy Board's exam. So friends, here I have written 7 accounting ratios. So I am going to explain to you in the form of this video. If you need to copy these ratios, you can pause this video and copy the video. So first of all, it comes the current ratio, which is current assets by divided by current liability. So that is the current ratio, which is current assets by current liability. Then comes quick ratio, which is liquid assets by current liability. So here you need to take into consideration that it is liquid assets. In order to find liquid assets, you need to calculate current assets minus inventory minus prepaid expenses and advance tax. So liquid assets is equal to current assets minus inventory minus prepaid expenses and advance taxes. Working capital equal to current assets minus current liability. So in order to find working capital, it is current assets minus current liability. Debt equity ratio, which is total debt by equity, which is equal to long-term debts by shareholders fund. Equity is also known as shareholders funds in accountancy. So you can also use long-term debt, not short-term, it is long-term. It is long-term debt by shareholders fund. Then come total asset to debt ratio, which is total asset by debt. Here the debt is a long-term debt, not short-term debt, it is a long-term debt. Then comes proprietary ratio, which is equity by total assets. So you need to do summation of the assets to get total assets, where equity is the shareholders fund. Next come interest coverage ratio. So interest coverage ratio gives you the interest which you get as profit. So you need to calculate it by doing profit before charging interest before tax. So it is a profit before charging interest before tax and divided by fixed interest charge. So you will get the answer in times: 2 times, 3 times, 4 times, 10 times. So you need to write it as times. Then comes inventory turnover ratio, which is the cost of revenue from operation by average inventory. So you need to take into consideration it is a cost of revenue from operation by average inventory, which you get in times. Cost of revenue from operation. In order to find cost of revenue from operation, you need to calculate it by opening inventory plus purchases plus carriage inwards plus wages minus closing inventory. So let me repeat: cost of revenue from operation is equal to opening inventory plus purchases plus carriage inwards plus wages minus closing inventory equal to, you get revenue from operation, or you can do it also in another way, like by revenue from operation minus gross profit. So what is gross profit? Gross profit equal to sales into percentage of profit. Let me repeat this: cost of revenue per inventory turnover ratio. Inventory turnover ratio is equal to cost of revenue from operation divided by average inventory, which you will get in times. So cost of revenue per operation equal to opening inventory plus purchases plus carriage inwards plus wages minus closing inventory equal to revenue from operation minus gross profit. Here or this is another method of doing this problem. Here you can do revenue from operation minus gross profit, where gross profit equal to sales into percentage of profit. This percentage of profit will be 150 percentage of profit, or it may be 10 percentage of profit, etc. So friends, this is the end of the video. Hope you found this video helpful. If you found this video helpful, please like the button, share the channel, and also subscribe the channel. Thank you.